Hello everybody. Welcome back for another video. Hope you're all doing well and that you're all having a fantastic day. And without further ado, let's jump right into it. I don't know if you can hear it. Maybe you're like psychic or something, but I just woke up. I don't know why, but I think I maybe needed to sleep. So here we are. For those of you not looking at the screen, it says Bitcoin's roller coaster around $24,000 continues, and LDO, I think this is Lido, has soared by 14%. I mentioned this maybe at the beginning of this month. I want to say the beginning of this month. It is abundantly clear to me now at this point that we are in some phase of the new bull run, new bull market. Not just because prices are moving back up as they have been since the beginning of the year, but I'm also seeing a dramatic increase in the amount of articles that are talking about other random altcoins that you have never heard of. And I'm telling you, moving up randomly in price. This coin moved up by 25%. This coin went up by 30% in 1 week. Why? This tends to always happen at the beginning of a bull cycle and actually sadly continues over the course of the next year and a half to 2 years as prices continue to move up. It's the same exact thing if you're seeing an increase in the amount of bots in the comment section or on Twitter or anywhere else. These things begin to flourish and grow a lot more as prices continue to recover because new people are getting into the market. The scammers are looking for a brand new way to make their brand new coins. The words not have priority, to make money. So anyway, that's just besides the point. Is look out for that as the year and a half continues. You're going to see a lot of new coins popping up and people are telling you, wow, this coin went up by 70% over the last 2 weeks. You should be getting into it. You should probably avoid it. But that's also just part of the bull cycle. We are currently at the point where a lot of, and I'm going to be as honest as possible, a lot of the people who are writing these articles and a lot of the analysts who are looking at prices don't know what to say, don't know what to write, don't really know where things are going. I think a lot of it has to do with this idea that cryptocurrencies are acting on their own and are not somehow tied to the world financial markets for whatever the actual case might be, but also when there isn't a clear indication that prices for Bitcoin or Ether or otherwise are up by 7, 8, 9, 10% over the course of a day. This is when we normally get the, yeah, prices are booming news, or if prices are going down, they can then write, oh, prices are going down. But when prices are going sideways, they never really know what to write. This is just from my putting information together from having been here with this channel for the last 6 to 7 years. It says Bitcoin price and Ethereum prediction. Can Bitcoin continue to soar above 24,000? And what's next for Ether? What's next for the cryptocurrency market is whatever the Federal Reserve wants. That's the long and short of it. There's no way to sugarcoat it. There's no way to look outside of the box and think that something else is happening. A lot of people are beginning to write things like this, and they are incorrect. I don't know how to make that any clearer. It says Bitcoin and the S&P 500, that is to say the stock market, part ways. Where now for the king coin? A lot of people in crypto are announcing or writing articles or declaring on Twitter that Bitcoin is actually no longer correlated to the stock market in the United States because on 1 or 2 days, Bitcoin has gone up in price before the stock market actually opened. And therefore, the last year and a half of macroeconomic events that have been closely linked to the price of Bitcoin and the wider cryptocurrency market, to them for some reason are now moot and no longer exist. Bitcoin is heavily tied to the stock market, as is Ethereum, as is every other coin. We are stuck to these things for the foreseeable future, and that's just the way that things are. Every single time that the stock market goes down, Bitcoin and Ethereum follow suit immediately. You can look at the charts. You can look at when an announcement is made. When the stock market goes down, a good 3.5 minutes later, the cryptocurrency charts are doing the exact same thing. Also for the inverse, If the stock market's going up, if stock futures are going up, the cryptocurrency market goes up the exact same way. We have not parted ways. We have not decoupled. We are still very much linked because that's just where the world's economy currently is right now. For those of you who missed the major news over the last 24 hours, the FOMC Fed minutes took place. It says the Federal Reserve officials saw that slowing inflation could support a peak in the federal funds rate this year and emphasized their dependence on the incoming economic data. Minutes from their last policy meeting has shown. The Federal Open Minutes Market Committee, or FOMC, opted to raise its benchmark interest rate by 0.25 percentage points to a target of 4.5 to 4.75. This was at the most recent meeting that we had. Before this, the minutes from the meeting on Wednesday afternoon showed that most Fed officials supported slowing the pace of interest rate increases as they assessed the incoming economic and inflation data. Stocks wavered, then fell following the publication of the meeting minutes on Wednesday. You might have noticed yesterday, the cryptocurrency prices were like 1% up, and then they all fell down. Why did they fall down? Because the stock market fell, and the cryptocurrency market followed the exact same thing. The news that we have right now, at least what we are getting from the Federal Reserve, appears to be that they are in favor of continuing to raise interest rates. Check. Cool. Got that. We knew that that was going to happen. It's just now that it seems that they may have hinted that they may do it 2 times as opposed to the 1 time that we were waiting for sometime in March. On the news that they were going to be raising it by 0.25% over the last couple of days, you've seen that prices have been wavering, staggering, sliding sideways because no one knew exactly how bad the damage was going to be. Were they going to announce 0.25 or were they going to announce 0.75? Stocks fell again on the idea that they would be again raising interest rates, which is nonsensical because we knew that they were going to be doing this. We have known this since last year. They've been doing the exact same thing. Why all the markets fell? I wish I could properly tell you. However, as markets around the world begin to open up once again, European markets are currently higher as investors react to the Fed minutes. For those of you who care, it says the Rolls-Royce stock is also up by 21%. Maybe they made a new flying car or something like that. Stock futures within the United States are also rising right now as well after the S&P 500 posts a 4-day losing streak. I just looked at the prices of the cryptocurrency market at the time of me making this video. Guess what? They're also in green after having been red over the last couple of hours. We're still following the stock market. That's just how things are. So, as we have seen since roughly around last summer, I'm giving it a very broad time frame, we hear that the Fed is going to be doing something. Stocks go up. People get lightly spooked. About 4 days before we hear that they're going to be having an actual meeting or some type of an event where someone stands on a soapbox, prices fall or trend sideways for about 4 days. They announce that they're going to be doing something. Prices fall the day after. Everyone has seemingly forgotten that they were going to be doing something, and then prices began to rise again. There's no exact date as to when the next big event is going to happen. I think I saw around people were talking about the very beginning of March for another discussion by the Fed of what's going to happen. I'm going to give you a huge psychic moment here. They're going to raise interest rates by 0.25%. I don't know how I know. It's almost like they have been doing this before for the last year and a half. Markets are going to fall, and then subsequently the next day they're also going to re-rise once again, as has been continually happening. The cryptocurrency market is not down. Prices fell a tiny bit. I mean, some coins are down by like 2%, but you know, it's better than coins being down by 19% like we were seeing sometime last year as people were panicking just about over everything. That's all the price news that we have right now. We'll see where the rest of the day goes. If stocks rise heavily today and do so also tomorrow, expect very big gains in the cryptocurrency space, which also usually tends to mean that the momentum from rising on Friday should continue into Monday when stock markets open. And if we're lucky, we might get one of those very rare Saturday and Sunday cryptocurrency prices moving back up events as well. That's the price news. And yeah, let's move on. In one of the biggest news stories of the day, after the Zhejiang testnet, went live in early February, the Shanghai upgrade of the Ethereum network on the Sepolia testnet, too many weird names, has been officially scheduled for the end of the month and is expected to have an impact on the price of the protocol's native cryptocurrency before the long-awaited mainnet launch. As it happens, the Shanghai Capella upgrade, also called Chapella, why not, is set for deployment on the Ethereum testnet Sepolia network at epoch 56832, which is scheduled for 4:04 a.m. UTC on the 28th of February. The core blockchain development team said in a blog post on the 21st of February. According to the team, they said withdrawals are coming after months of testing and an ephemeral DevNet launch, as the upgrade combines the execution and consensus layers. Specifically, I don't even have to read out the rest of it. The news is we are now at the next iteration of the end of the line for Ethereum's upgrade. So historically, and most coins tend to have two different testnets or testnet periods. We have now been told that the 28th, the last day of this month, is going to be the last and final. I believe this is going to be a public testnet, if I'm not mistaken. They've apparently ironed out all the issues that they had before with the other testnet, which apparently they found some bugs inside of it. They've all been cleared. So this is now the final run, which always happens is, for those of you who haven't been here, this is going to launch on the 28th. And after about a good week, a solid week of there being no problems, no hiccups, no issues, this is usually when they then announce when the actual final upgrade is going to happen. That is to say, the Shanghai upgrade for people to be able to withdraw and also subsequently redeposit their cryptocurrency ETH onto cryptocurrency exchanges to be able to properly stake it on the network. So this is also very big news. A lot of people were talking about this, discussing this, because this is something that we've all basically been waiting for. After this upgrade, that is to say Shanghai, there's nothing else really that the market is looking forward to. There may be some other things to make smart contracts smoother. There may be whatever the case might be. The other major big thing would be like Ethereum actually having more than 15 transactions per second, getting to the, once again, Vitalik Buterin predicted 100,000 transactions per second. But the last real upgrade was the merge to make them proof of stake so that they consumed less energy. And then the second part has always been staking. So once we have this actual upgrade, sky's the limit at that point. But we do not have a definitive date for the final upgrade. But as of now, looking around, the dev team has said that it is still going to happen sometime in March. Fantastic. That's the Ethereum has confirmed the date for the Chapella upgrade on the 28th of this month. Yeah. Let's move on. So there's a lot of, as every single day, there's a lot of really weird news floating around right now. A $1 billion deal by Binance US to purchase assets of the defunct crypto lender Voyager has been opposed by the New York and federal finance regulators, who said on the 22nd of February it could prove discriminatory and unlawful. I don't even want to dig into that. The move follows increasing interventions into crypto by the SEC Commission, whose probes into the alleged sales of unregistered securities recently caused crypto exchange Kraken to shutter crypto staking operations within the United States. Elements of the proposed Binance US Voyager deal may also infringe on law, given how the plan envisages repaying Voyager's former clients, the SEC said. Under the deal, the transaction in crypto assets necessary to effectuate the rebalancing, the redistribution of such assets to account holders, may violate the prohibition in Section 5 of the Securities Act of 1933. The Securities Act of 1933 against the unregistered offer, sale, or delivery after the sale of securities, a filing by the SEC said, citing the particular VGX token issued by Voyager. So let me give you what's probably actually happening. For those of you who haven't been paying attention over the last year or simply haven't been here, don't blame you. The SEC has been in everyone's cookie jar. That sounded a little weird as I say it. They've basically been in everything that they should not have been inside of that doesn't belong to them, because the SEC has realized that they are going to, in the very near future, become incredibly irrelevant in the financial space, and they're looking for a way to cling on to this idea that they need to police this new sector that they have nothing to do with, have created nothing inside of, what have you, so on and so forth. I assume that what's actually taking place is this is probably trying to stop Binance from becoming a relative monopoly within the cryptocurrency space. If you look at what Binance has been doing, Binance's acquisitions and mergers, and especially after the, once again, pay attention, after the collapse of FTX, for those of you, you should have all known that. But the issue herein lies that a lot of the news that we were getting around that time frame was that allegedly there were a number of sharks that were circling around FTX before they even collapsed, wanting to acquire a large number of, once again, allegedly, this is the news that we were getting on my computer screen, that a lot of sharks were circling around companies that were owned by or were subsidiaries of FTX that were overvalued, air quotes, at the time. $800 million, $1.2 billion, FTX magically, weirdly collapses, and a lot of their companies that they held that they had to liquidate to stop the bankruptcy filings were then valued at $15 million, $48 million, as opposed to the $1 billion that they were before. And the news was that we were getting that a lot of the larger cryptocurrency companies, Binance included, were now then trying to acquire these new companies. But part of the issue is, and it has to do with monopoly law also in the United States, is that, and around the world, is that if you own everything, you kind of become everything. That's usually one of the issues with things in the world right now. If you look at the major companies, they usually own every other company or a portion of every other company, and these constitute actual monopolies. So this was very big in the news, mainly because it had to do with the letters SEC and Binance, and the SEC has been on Binance's back very much so over the course of the last 2 or 3 months. It kind of, got sprung out of everywhere after we heard about the news of Kraken, and then the news of the SEC going after Gemini, and then also going after Coinbase. I don't think they like Binance at all. Binance is kind of the they comply, but it's like they really don't comply because they're still kind of on the fringe edge of what's happening within the cryptocurrency space. So a lot of people are annoyed, once again, because the SEC is trying to control things happening in the space. I think they're using this as a scapegoat for the idea that Binance shouldn't be doing something because of an unregistered security offering, blah, 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 as opposed to the actual... I think that U.S. regulators are also realizing that Binance is quite huge. I mentioned this before. Pay attention to everything that's happening with Binance. The people from Binance, even the CEO of Binance, they've been shaking hands with world leaders and actually forming partnerships with different countries. Their power is near unlimited at this point within the space. That's why I think a lot of times when we do hear that something might be amiss, it kind of leaves the news very, very quick, and I assume there's money. Anyway, that's the SEC is saying no to Binance US for trying to acquire Voyager's assets. I think it has to do with the monopoly aspect of holding too many assets, or basically owning everything at the exact same time. Regulators oppose Binance US $1 billion deal to buy Voyager assets. SEC and NYDFS argue against Binance US $1 billion deal to acquire Voyager's assets. Very big news. What a time to be alive. And yeah. Whoa, that was unexpected. Let's move on. Also no, not really. I don't think that. Crypto exchange Coinbase is struggling as a result of the bear market. I don't think so. But the firm's CEO, Brian Armstrong, says they're built for the long term. During an earnings call on Wednesday, Armstrong said the industry is going through one of these difficult periods in the crypto cycle. He said the narrative in crypto tends to flip every 2 years. It's either irrational exuberance or despair. Neither one is true at any given time, but we're in one of those despair phases right now. Coinbase's fourth quarter and full year 2022 report to shareholders show that the biggest U.S. crypto exchange lost $2.64 billion last year. In 2021, they had gained or had a net income of $3.62 billion. I don't think we are, I'll say this lightly and then we'll move on. I think Coinbase got very comfortable being at the top of the ladder for a very long time when there were no other cryptocurrency exchanges that were flowing around, especially not within the United States. And then at some point, Binance and Gemini and Kraken reared their heads into the cryptocurrency space. And now I think the idea that people aren't using Coinbase as much or finding other cryptocurrency exchanges or simply have actually just moved to normal Binance, I think was just going to be the logical trend after a very long time. For those of you who weren't here for many other videos that I had a couple of years ago. If you look at Binance's and Kraken's and Gemini's fees comparatively to Coinbase, the other three win compared to Coinbase. Many other times, Coinbase's fees on their platform, that is to say, the fee that you pay them for doing a certain action. Many other exchanges, Binance would have like 0.5%. Maybe Kraken had 1%. I don't know the numbers, but remember that one time in the video where Coinbase had a 25% fee? And I was like, how is anyone still using Coinbase? And people were like, well, Coinbase is easy to use. And I'm like, yeah, but gosh darn it, I'd rather learn how to do something else to save myself an extra 24.5%. Like, it's just nonsensical. So I think the same exact way, I think Coinbase recently announced that they're, I think, not shuttering their NFT platform, but they're going to be trying to restructure it or make it look different or something along those lines. It's like they also had a platform where it was also very exclusive. You could only join Coinbase NFT to sell NFTs if you were, a major, like a literal major artist. If you had like 400,000 followers on Instagram, if you were very well known, if you had already sold tons of pieces, you excluding other people from your market or having very high fees, people will stop using your platform. Just because you're supposed to be the normal, easy to use website, people will figure out, oh, that other website is also actually easy to use. The other crypto exchanges aren't written in hieroglyphics. If you've ever been into stocks, bonds, and or mutual funds, a lot of times you'll even see charts and listings of these things, like as to which ones you should be aiming for, because the actual what's it called? Not custodian fee, like the company who oversees it, they also have their own fee. And sometimes companies will get a lower rating because they have a 0.5% fee. So a lot of times you'll go for companies who have like a 0.25% management fee. That's the word. You go for the ones that have 1/4%. You don't go for like, well, that website looks easier. Anyway, let me pay 25% or 11% for some of the fees. Like, and I'm wondering as well, we got early indications, I think at the beginning of this year or end of last year, from a number of cryptocurrency exchanges who were announcing that they would also be supporting Ethereum staking. Logical. If they didn't, they're completely weird. And I think Coinbase also had one of the lowest percentages. I think theirs was like 3% or something like that, while other crypto exchanges had 4.25 or 5% or 5.2. And I don't think that Coinbase is struggling because of the bear market. I think that people who are still in crypto have simply left and have found other ways to exchange their money. Like, in a world where cryptocurrencies are global and, you can type in the name of a cryptocurrency web address onto your web browser and find another crypto exchange, it just seems completely logical. But this was also lightly major news. A lot of people being like, is the bear market back because Coinbase is not doing well? No, Coinbase is not doing well because Coinbase got greedy. That's just how it goes. Why would I even think of going somewhere where they charge a 10% fee when I could pay 0.5%? I'm making 9.5% more money than I would have of my own money. Even more so, most of these things you can stake on your own. I told you all before about Exodus wallet, not affiliated. Exodus is a wallet that you hold your own private keys on your computer, but you can also stake directly in Exodus from your computer. Guess who you pay the fee to? Nobody. It gets paid to you because you're staking on your own computer. Why would I want to? It doesn't make any sense. So anyway, that's the Coinbase is struggling. I don't think it's because of the bear market. It's that thing I was telling you all before. Everyone's like, yo, we have to close our doors or fire 20% of our workforce because of FTX. Oh, really? It's Sam Bankman-Fried's ghost. That's what's doing it? Anyway, that's the Coinbase not doing well. I hope they lower their fees because I have a strange feeling they're going to be very similar to OpenSea. Where people are like, oh, the website's nice and easy to use, but there are other places I can do my business. That's the Coinbase news. And yeah, let's move on. All right, here's the other really, this was also incredibly popular news. U.S. District Judge Victor Marrero has decided to classify Flow's NBA Top Shop NFTs as securities. I'm sure someone just clutched their pearls, and this has caught many people off guard. You know why? Because that doesn't make any sense. The judge's decision was predicated on the fact that Dapper Labs kept a private blockchain and limited NFT trading to the Flow platform. The value of these NFTs, sometimes referred to as moments, was entirely dependent on Dapper Labs' internal processes. Thus, purchasers had to put all their faith within the company. Since that, Top Shop's moments matched the criteria for an investment contract. The court ruled that they were securities. This was owing to the fact that Dapper Labs, the company behind NBA Top Shop and the administration, had a direct impact on the moment's worth. Investors allege that the NFTs should be classified as securities under U.S. federal law. Therefore, a case was launched in the U.S. District Court for the Northern District of California. As an added complication, Dapper Labs had breached security laws by failing to file the NFTs with the SEC. Moreover, whether or not different types of digital assets should be categorized as securities was a major topic of controversy at the time this judgment was reached. Already, the SEC has started regulation by enforcement approach towards the crypto sector as a whole, and this latest ruling will strengthen its clause. So let me tell you exactly. Now, I know nothing more than what I just read to you. I know nothing more than that, but I'm going to tell you exactly what happened. Back in 2017, people realized that they could create their own cryptocurrencies. And this began the advent of, if you don't do it, I'm going to sue you. Or if you don't give it to me, I'm going to sue you. Or if the price went down and I own it, I'm still going to sue you as well. This created Bitcoin Cash, the coin that came about in 2017, where these people basically realized that they could create their own coin. They claimed that it was the real Bitcoin. There were tons of lies for a number of years, what have you, so on and so forth. When this coin launched, Coinbase, and I believe Kraken was around at the time, they did not want to list the coin because there's only one Bitcoin. However, a large amount of people came forward and they said, if you don't do it, I'm going to sue you. Why? Because Bitcoin, I'm not joking, this is one of the reasons. They said Bitcoin is a cow and it makes milk. And when my cow makes milk, Bitcoin Cash, I deserve to have the benefit of getting that milk as well. And everyone was like, cool. The problem is that people began to do this for everything. This happened at the beginning of 2018, where people came forward and launched a really weird lawsuit. It was two separate lawsuits. One was multiple people, and the other one was one guy who came forward and sued Ripple for claiming that XRP was an unregistered security. Why? The one guy claimed that he purchased XRP with an expectation of profit. He tried trading the coin. He lost $50, $50, and therefore XRP was a security because he ended up losing money on it. If you've been paying attention, over the last year and a half, regardless of people trying to hone in and focus on NFTs falling in value, losing value, not being worth the millions and bajillions that they once were, why did this happen? Because everything else around the world also fell in value. The amount of people I've seen, I told you these stories before. I tell you the day after it happens. When I meet people for dinner and they're like, so how are those NFTs going? And I'm like, how's the value of your property going? Because I know that also fell in value as well. These probably were released to much fanfare. I remember when the Top Shop Flow ABC, I don't know what these things are called, first were released. People were going crazy over them. Basketball is a huge sport, not only around the world, but within the United States. If you've never been to the States or you live in the States, you know that basketball is huge. The idea that you could own these actual moments of your favorite players making a 5-point throw or dribbling all across the whatever. Everyone went completely crazy for it. Some of these things were selling for tens of thousands of dollars. I assume with the world markets dropping, these probably also fell in price as well. I think from what I am getting is that a group of investors came together and actually sued Top Shop and asked them or the judge to classify these things as a security. Why? Because of greed. It's always the exact same thing. People get into this space, and this is why I make sure to tell you all the time. This is exactly why this is why this channel is not a hype channel, because people lose their minds all the time for anything. People constantly throw their money into anything that they want, and then they think that they should have no blame when the actual value of the thing ends up collapsing that they, an adult, put their money into. Remember this and remember this well. You are responsible for your own actions. You invest money in the cryptocurrency space yourself. It's not your girlfriend's hand that's clicking buy. It's not your grandmother's hand that's clicking sell. You bought the things that you bought at the time because you wanted to buy them. Period. Cannot get any clearer. So, on top of that, rulings like this are so dangerous for the cryptocurrency space because it sounds weird, but it sets us back a couple of years. Because all it takes is a handful, very small handful of very greedy people. And these people fit into one of two categories. These are people that got into the NFT or cryptocurrency space who had very little money. They threw what they had into it, probably took out a loan. Watch out for that as we move up again in prices. Do not, DONOT, take out any loans to put into crypto. If you didn't hear me the first time, that was English. I really can't help you any further. Don't take out any loans to ever put into crypto. Regardless of how much you think the market is going to rise, you will probably lose money. Don't do that to yourself. These are people who probably take out loans, put it into a market, put it into the NFT market. The prices went down, they got upset. Or the other side is these are very heavy-handed investors. They put several $100,000 into the market, bragging to other people that these things were going to be worth millions. They didn't pay attention to the actual cycle of the markets. The prices fell down. They're angry. Now they want their money back. And the way that they think about doing this is by suing the company directly. So these people, in turn, actually end up winning the lawsuit. They get the money that they wanted to get, but they destroy it for the rest of the cryptocurrency space. Why? The same exact way that I told you, we are going to have a major problem if Ripple loses against the SEC. A lot of people online seemingly don't get this. I think maybe people just didn't pass the first grade. I'm not really sure exactly what it is. The SEC thinks that they control crypto already. The fact that this was given as the judgment that these NFTs on a blockchain are considered securities, which means that the SEC now has jurisdiction over them. If we hear that Ripple has lost a lawsuit and therefore one of the largest coins in the market, it will be ruled over and looked after by the SEC. They're going to go after every other single coin. And this is what people don't know about and also don't care about because people are so freaking greedy in this space. This was major news. Everyone was talking about this. This is all over the place because people are a bit confused as to why this happens. This also, and I will say this in the nicest way possible, we are capable of having a hyper decentralized space within the cryptocurrency community. There are a number of companies And I told you this before. I call these corporation coins, and you understand only years later on why I call them this. If you are creating or allowing people to create NFTs on your blockchain and you keep them just on that one blockchain, it comes out as suspicious, or it comes out as, like the article says, everything that company did basically went on the actual actions of everything that was happening on that blockchain. We have to make the space more decentralized, and a lot of these companies, part of the problem is they don't want to do that, because you relinquish a huge amount of power by making sure that your NFTs, your projects can go on multiple different chains and can flow on all these different spaces. But the moment you don't do that and you make things that are or should be decentralized, like you should be able to take an NFT and move it anywhere that you want. This is part of the thing that's going on with VV as well, and they need to get it together. There is no if, ands, buts, or maybe, or WEN. They need to, if all these NFTs are already on immutable, people need to be able to move their NFTs around, because who do you think the SEC is going to go after right after this judgment? So many companies get so greedy under the guise or the idea of decentralization, or, we're on a blockchain. The SEC is going to control the entire cryptocurrency space, and they know it because of greed. They know that these companies don't want to relinquish control, and they're sitting in a room combing through everything, figuring out exactly who is doing what, and they know, well, listen, we got them on this, so we can definitely call them a security. Why do you think they're ramping up all their efforts over the course of this year? This was major news. Major news. It has now been ruled that NBA Top Shop NFTs are now securities. There's a lot of really weird news of people trying to equate this to Ripple. It says NBA Top Shot ruling is net positive for Ripple. Here's why. Listen, stop trying to link everything to the idea that anything that someone else loses is therefore something that could be beneficial to Ripple in some sort of way, because that's just not how the world works. Anyway, that's the Top Shot news. Very, very popular. Everybody's talking about it. It's all over the place. I shudder at the thought of what this is going to mean for the ramifications of the rest of the NFT space, as the SEC basically has had a win. Yeah, I do hope that you've all enjoyed. Hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. Crap. As always, a very big thank you to my Patreon supporters: Martin Stoyer, Bodie McBoatface, Sam Ratter, Dotha Diddy, Manny Cryptos, Crypto Gambino, Auspicious Agile and Blockchain, Jamie Saad, and Let's Move On, Empire Queen, Roman Gaba, Bitcoin, Ben Arachno, Dave the Dealer's in, Captain Something in the Z-Way, Lay, Mobarazi, VB Nerd, 21, Lauren De Silva, Quoted Biddy, Troy, All Good, Space Case, Need a Miracle, Pattern, Noster, Navarro, Williams, Utopia 569, Moonman, High XRP, Nostromo, John Sarcini, Anna Marita, Bibliophobia, Adam Graysake, Wise Night Owl, 242 to the World, Bankroll Network, Crypto Artist, Cold E3D Set, Suna Paxis, Jim Gardner, Jeremy Fox, Minting Coins, Yes to Crypto, Anytime Fitness, Monk's Corner Staff, almost said Bite Me a Cake, Bake Me a Cake, Tigger Macho Nisa, and On Crypto with Lionel. Thank you all very, very much for your support. Thank you everyone for watching, listening, liking, commenting, and or supporting, and I will most certainly be talking to you all soon. See you.